Let's have a look at the example that I left you with in the capital gains tax video. I've taken just selections out as we deal with it, but you've got the whole question and I hope that you've attempted it on your own. It's Sherry Jones. She's 59 years old and she's decided to emigrate, and so she sold some assets before she leaves the country. And remember, always when you're doing a question, start off with, after that first paragraph, then look at the required so that you know what to think about the other information as you read through it. So the required says calculate Sherry's taxable capital gain or capital loss for the year ended 29 February 2020, and she has an assessed capital loss of 55,000 Rand brought forward from the previous year of assessment. So make sure you highlight that so you remind yourself to bring it into account. Now remember, we have to deal with each asset on its own. So we look at the first disposal, and it says that Sherry's been the sole proprietor of a private consulting business for the past 7 years. She managed to sell the business for 3.4 million Rand, and she correctly determined that the cost of acquiring and creating the business amounted to 600,000 Rand. Okay, so in our answer, we're going to start our solution and sale of the business. And remember, we must do each asset separately. So we look at the proceeds, which the question told us was 3.4 million Rand, less the base cost, which was correctly calculated at 600,000 Rand. And that gives us a gross capital gain on the sale of the business of 2.8 million Rand. Now remember, I said to you in the video that we need to know if there's any specific exclusions for each asset. And in this case, it's the sale of a small business, and the exemption is therefore 1.8 million Rand, which then gives us a capital gain, which we include in the second column because we're going to total all of those up to get to our aggregate capital gain, and that's R1 million capital gain on the sale of the business. If we go back to the question, we see that the next disposal was that she made a capital gain of 30,000 Rand, so the answer has been given to us on the sale of a painting, and it had been in her living room in the house. So we straight away know that this is a personal use asset and we're not going to include any gain in the calculation, but we need to show everything, otherwise whoever's marking our paper thinks we've just left it out. So in our solution, we add their painting. We say that it's a personal use asset because the exam paper requires us to always give reasons where there's a nil amount, and then we put nil in the total column. Okay, so the next part of the question says, so the third disposal, Sherry lived in a house in Waterkloof, Pretoria for 21 years. She purchased the house initially for 700,000 Rand. Additional legal fees and transfer duty amounted to 50,000 Rand at the time of the purchase. She made improvements prior to 1 October 2001 of 200,000 Rand. And on 1 October 2001, the market value of the house was 1.2 million, and the time apportioned base cost was 1,142,000 Rand. She also installed a sprinkler system during October 2012 at a cost of 10,000 Rand, and she sold the house in February 2020. She received a net amount of 2.2 million Rand after the deduction of agent's commission of 180,000 Rand. Sherry always used 5% of her house for business purposes. Okay, how are we going to approach this information? Well, remember, we first have to do the proceeds on its own, and it has to be the gross proceeds. So it's the 2.2 million that she sold the house for, plus we need to add back the 180,000 agent's commission. We'll deal with it later, but it needs to be included in the full amount that she sold the house for. So that's 2,380,000 Rand proceeds. Then we have to work out the base cost of the property. Now, this house was purchased before capital gains tax came into being, so we have to work with a valuation date value. And paragraph 26 says that as soon as the proceeds exceed both the expenditure and the market value, then we can use the higher of the time apportioned base cost, which was given to us in the question as 1,142,000 Rand, or the market value of 1.2 million, which was also given to us in the question, or the 20% rule. Now, the 20% rule, we take the proceeds minus any expenditure after the 1st of October 2001. So that's the 180,000 commission, agent's commission, and the 10,000 Rand for the sprinkler system. We multiply that by 20% and we get a valuation date value of 438,000 Rand. Now we use the higher of those three. So obviously the highest one is the market value of 1.2 million Rand. So if we go back to our solution, we've got proceeds of 2,380,000 Rand, and we've got a valuation date value of 1.2 million Rand. But we're allowed to add any expenditure for improvements to the property or any expenses in terms of buying or selling the property. We can add to that valuation date value. So the commission, sorry, I need to correct myself. We can add any expenses that happened after the 1st of October 2001 to the valuation date value. So the commission was part of selling the asset, which was during the 2020 year of assessment, and the sprinkler system was in 2012, which is also after the 1st of October 2001. So all of those get added together to give us a base cost of 1,390,000 Rand. Okay, so that gives us a capital gain for this asset, the residential property, of 990,000 Rand. Now remember, a residential property is subject to a primary residence exclusion if it was her primary residence and it said she lived in the house. However, the question also told us that she used 5% of the house always for trade income or for business use. So we need to take out 5% of the capital gain because that relates to business use, and we include it straight in our second column because business use of a primary residence does not have any part of the exclusion. And now we can say, all right, 940,500 Rand qualifies for the exclusion. The exclusion is up to an amount of 2 million Rand, so the full gain on the private residence can be excluded, and therefore nothing is included in the total capital gains, the aggregate capital gains that we're going to add up. So we add up our right-hand column and we get a total capital gain of 1,049,500 Rand. That's the 1 million Rand from the small business, naught from the painting, and 49,500 from the business use of the primary residence. She's entitled to an annual exclusion of 40,000 Rand, so that gives us an aggregate capital gain of 1,009,500 Rand. Remember, we highlighted in the required that she had an assessed loss brought forward, so we bring in the assessed loss from the previous year of 55,000 Rand, and that leaves a net capital gain for the 2020 year of assessment of 954,500 Rand. Okay, but now we have to work out how much is included in taxable income, and so the taxable capital gain is the total net capital gain times 40%, and that gives us an amount included in taxable income of 381,000 Rand. 381,800 Rand. Okay, so that's how you approach a capital gains tax question, with looking at each of the assets and the information that's given for each of the assets.